Hello traders and welcome to another video review. Today is Friday, October 15, 2023. Let's take a look at the Forex economic calendar for the last day of the trading week. Plenty of data from China were published overnight. So what do we have here? CPI numbers, most likely worse than expected. PPI numbers, worse than expected. Exports, a little bit better than expected. And the imports, worse than expected. Trade balance overall increasing to 77.71 billion USD. So because of this data, we will definitely take a look at the Australian and New Zealand dollar later on. What else do we have here? From Germany, German Bundesbank President Nagel and Buch gave a speech. CPIs from another countries like Sweden, Switzerland, France, Spain, Poland, and I guess that's it. Industrial production data from the Eurozone is scheduled for release at 11 o'clock. And then we have a bunch of data from the US. Export price index, input price index at 2:30. At 3 o'clock we got ECB President Christine Lagarde to give a speech, and then the FOMC member Harker will give a speech. And at the end of the day, we have the Michigan inflation expectations, 1 year, 5 year, and the consumer expectations and consumer sentiment data scheduled for release at 4 o'clock. Bank of England MPC member Canliffy would give a speech at 6:30, and then at the end of the day we got federal budget balance and US Barker Hughes oil rig count and total rig count from the US, of course. So, no very important data releases. Nevertheless, the data from China might be very interesting. So, let's take a look how the market reacted after this data were published overnight. We'll start with the Australian dollar. For our chart of the Australian dollar is showing as a big decline to the level of, let's see, this one. I guess it will be 6,310. So this is the intraday technical support, and we are heading towards the technical support, key technical support from the beginning of the October, located at 6,288 pips. So this is the level we are heading to. Now, as you can see, this is the August, this is the July. And so it's obvious we are in the downtrend. We have a lower highs, lower lows, lower highs, lower lows, lower highs, and now it's time for the lower low. Where is some sort of the intraday technical resistance? You can see that it's pretty far away because the technical level might be somewhere around 6,393. However, the thing is that we are now trading below the 50 and 100 periods moving average as well. Both of them are here, 6,392, 6,373. So pretty intense level or zone here around 6,390, and the bears will definitely be active around this level. The room in the momentum is a minimum, right? There's like, I don't know, 10 points, maybe not even 10 points, but it's still enough to test these lows. And I guess that before we will close this day and the week, the market will test the lows from the 3rd and the 4th of the October, right? The question is whether we will close below it or above it, because then we will have the new daily close, lower low, and new weekly close, new lower low on the weekly. Then that's another confirmation of the downtrend. Let's switch to the New Zealand dollar. And I guess that the New Zealand dollar will react very similarly to the situation on the Chinese data. And of course, you can clearly see it did actually reacted the same way. We got very nice downside movement, very dynamic, very aggressive. So what are the current levels that we are interested in? This is one of them. 5,866 is the current technical support and the target for the base, and the other target is 5,854. So we have a pretty nice zone here. The local low, well, it's still the movement to the downside is still in progress, but the local low was made so far at 5,905, so we are not that far away from this lows here. This is the again 4th and 5th of the October 2023. Market conditions are extremely oversold already, so there's a minimal room to the downside on the momentum, if any. There's still plenty of the place here, so like a 40 pips or more. Where is the technical resistance? Well, if I could put one level, place one level, it will be this one. 5,918 should be the technical resistance. Of course, the 50 and 100 periods moving average located at 5,958, 5,980. All of them will act as the technical resistance, dynamic technical resistance for the bulls if there is some sort of the bounce to the upside. So overall situation on the New Zealand dollar looks again bearish. Looks like this market wants to go a little bit lower, and it might even happen today as well. Let's now switch to the Canadian dollar, because the Canadian dollar is as well the commodity currency, so it is dependent on the China, right? So what do we have here? Complete inverse reaction. We have a bounce. Okay, we have a bounce to the upside. So this level here might be considered as a technical support, of course. 1.3568. We went up towards the level of, let's say, technical resistance. Technical resistance might be located somewhere around here, or maybe even here. Okay, let's just leave it there. 1.3681. As you can see, we broke above this level, but we didn't close above this level on a 4-hour chart and daily as well. The local high is 1.3699, but there is still some room to be covered towards the swing high at 1.3783. So that's our technical resistance. Momentum is strong, momentum is positive. There's still room to the upside on the momentum. There is still room to the upside on the chart as well. So we should wait for another spike to the upside on the US dollar to the Canadian dollar chart. It looks like this market wants to go a little bit higher. What's the background? And the background from the lows at the middle of the July 2023, there is some sort of the very nice upside movement. It even looks like a kind of a impulsive. So we should be prepared that the US dollar to the Canadian dollar market might actually continue this up movement, especially because the fact that we are again above 150 periods moving average, right? So it looks like pretty much the level of 1.3682 might not be enough for the bulls. They might reach higher. They might try to go to the max level, which is of course located at 1.3784. Right, so this is the last known swing high. This one was made, of course, on the during the extremely overbought conditions. So this pullback might be only a reaction to the bearish divergence, and which is why we are now aggressively moving higher towards this swing high, waiting for the breakout. So that's everything for me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.